Hey there, money mavens. The Fed just dropped a bombshell. They slashed interest rates by a whopping 50 basis points. That's right, 0.5% gone in one fell swoop. This is huge news, and you need to know what it means for your money. The Fed doesn't usually make moves this big. So, why now? The economy is sending mixed signals, that's for sure. But the Fed sees trouble brewing and they're taking action. They're cutting rates to stimulate the economy and keep things humming. This rate cut is going to send shockwaves through the markets. We're talking stocks, bonds, gold, the whole shebang. Buckle up because things are about to get interesting. Now, let's break down exactly why the Fed made this move and what it means for you. First up, let's talk inflation. It's been the buzzword on Wall Street for months. Prices are going up, 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 and that's eating into your hard-earned cash. The Fed knows this is a problem. They're supposed to keep inflation under control. And this rate cut, well, it could actually make inflation worse in the short term. But here's the thing. The Fed is betting on a bigger problem. That problem is jobs. The labor market is showing signs of weakness. We're seeing layoffs, hiring freezes, the whole 9 yards. And that spells trouble for the economy. People without jobs don't spend money. And spending is what keeps the economy going. The Fed is hoping this rate cut will give businesses the confidence to hire again. Lower borrowing costs mean more money in their pockets to invest and grow. Now, let's talk about the elephant in the room, the national debt. It's massive and it's growing every day. Every time the government spends more than it takes in, the debt goes up. Higher interest rates mean the government has to pay more to service its debt. That's money that could be going to other things like infrastructure or education. So, in a way, the Fed's rate cut is also about giving the government some breathing room. But here's the catch: lower interest rates could also encourage more borrowing, and that could make the debt problem even worse down the road. It's a delicate balancing act. Section 4. Good news for borrowers, housing, and stocks. Okay, so what does all this mean for you? Well, if you're a borrower, this rate cut is good news. Mortgage rates, car loans, credit card interest rates, they could all start to come down. That means more money in your pocket every month. Lower rates could also give the housing market a boost. A cheaper mortgage means more people can afford to buy a home, and that could drive up home prices. And what about the stock market? Well, the market loves lower interest rates. Why? Because it makes it cheaper for companies to borrow money and grow their businesses. So we could see stocks head higher on this news. Section 5. Gold shines, dollar dips. What's next? But hold on. There are always two sides to every coin. Lower interest rates could weaken the dollar. That's because investors might move their money to countries with higher interest rates. And if the dollar weakens, that could push up the price of gold. Gold is seen as a safe haven asset in times of uncertainty. So if you're looking for a hedge against inflation and a weaker dollar, gold could be a good bet. So there you have it. The Fed's rate cut is a big deal. with lots of moving parts. It could be good for borrowers and the stock market, but it also carries risks like higher inflation and a weaker dollar. Keep your eyes peeled because things are about to get interesting.